The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to The Trader's Edge. I'm your host, Steve Rhodes. Thanks so much for joining me, folks. I absolutely love being here with you. Hopefully you're off to just simply a fantastic beginning of your Friday. If you're not, just change that in the snap of fingers, in a heartbeat, folks. You can. We're going into a holiday weekend here, Memorial Day. Everybody be safe, be happy. You know, it's all about being happy, folks, and happiness is really just it's really just all about you becoming happy with who you are, or at least the road that you are on to become whoever it is that you want to become. That's what happiness is all about. It's not about anything, just not about any amount of money. It's not about any things that you accumulate in life. It's all really between the years, folks. You can be also happy in a heartbeat as well. So thanks for joining us. It's going to be a great Friday. It's always about your health, your wealth, and your happiness, your relationships. And we do appreciate the relationship that you have with us here at TFNN.com. Now, you can always watch this show on TigerTV. All you need to do is go over to the homepage of TFNN.com, click on the TigerTV button, and you're just a couple clicks away. Even better than that, if you watch us on a mobile device, maybe it's an iPad, an iPhone, a Google device, almost anything except for a RIM, and RIM's having trouble, aren't they, folks? You can just simply go over to the homepage of TFNN.com. Over on the right-hand side, you'll see a little red bordered area. Click on that. You can mark that as a bookmark, and you'll be able to watch us. We're just one click away, always on your device, 24/7. And folks, there's really, going into a long holiday weekend, if you spend any time thinking, of course, everybody's going to spend time thinking, but there's two areas of your life that you want to master. You want to be able to, in essence, to master the science of achievement. What I call the science of achievement, it's really the technical part of life, technical part of trading. I spent most of the week discussing discipline with you, and I'll continue discussing discipline, throughout the weeks to come. And you can always go catch the archives of this show on Channel 9. So I recommend you do it. Certainly at least listen to the first, I'd listen to the whole shows, because what I'm always doing is teaching you something. We're always going to be taking a look at the markets. We're going to be taking a look at the patterns that are out there. You have patterns. I have patterns. And the market is made up of you and I. And it's nothing but a market of patterns. A to B equals C to D, whether it's swing point patterns, whether it's sacred geometry, whether it's channels, whether it's primary trading ranges, whether it's the Chapman wave, whatever it is, there are patterns out there. You just need to gain the knowledge, because you're always trying to acquire knowledge, and this is a great place to be able to do it. So this weekend, folks, I want you to go out there, I want you to think about some disciplines. How can you become disciplined when it comes to trading? What is it that you could actually do? What do you need to make a must? Not something that you should do, but what do you need to make that's a must in your life? And that way you're working on that 20%. That 20% is pretty key. It's that other 80%, though, folks. That's the 80% that is the art of fulfillment, and that's all inside the mind. There was a great quote in the Tiger's Den. If you haven't tried our Tiger's Den, whenever you're trying to take yourself to another level, folks, what you have to realize is that the patterns of the past are not going to get you to where it is that you want to go. So you have to be able to learn how to break your old patterns if you are trying to break through. And that's what the markets do. The markets try to break through areas. They try to break through swing points, B points, and we're certainly going to be taking a look at the euro. The euro is certainly trying to break through its swing point on a weekly basis. And right now, it is having success. Nobody over in London, or seems like around the world, wants to go home with euros. And going into a holiday weekend, folks, we'll take a look at the euro. Where that closes is going to send off a pretty big signal, at least one of saying, something to think about. There could be some real fireworks. Now, there's some divergence when we take a look at our futures markets out here. We're going to take a look at that, and anything else that you'd like to, you can always give us a call. Again, 877-927-6648. So I want you to work on that art of fulfillment. That's at 80%. That's that psychology. And trading, this is the quote that came from the Den. Trading, folks, it's 80% psychological. And the other 20%, it's in your head. I love that. I absolutely love that quote. That will be with me forever. So let's go take a look at the markets. Where do we want to start? Let's start, since if you're watching on Tiger TV, the first chart that I actually have posted here right now happens to be the DAX. And right now, you got the DAX trading down 18 points. And when you take a look at the DAX here, folks, what you're looking at, as well as it's one world market, we can take a look at similar uptrend channels that the DAX have been traveling in. The DAX traveling started that on the bottom part of that channel, really started on September 12th, 2011. And to draw a channel line versus a trend line, you want to look for co-located opens and closes. That's what we have here. You're just taking a look at those touch points, and as you take a look at this bottom of the channel line here, you know, it's got plenty of co-located opens and closes. Right now, you've got the DAX here testing again this morning. It's trading right on that channel line. Not only is it doing that, it's trading right here at the bottom of the swing point from October 28th. The low there is 63.0550. It's trading right now at 62.9850. So just slightly below it. And what is all that about, folks? Well, it really is all about the euro. So let's switch over to the currency charts. And now, the DAX, just before we finish, the DAX is trying to make a 1 to 1.272 A to B equals CD down. If we take a look at the retracement off of its A point, which would be March 16th, which you had a false break side to the top side there, and it did probably just about a 50% retracement. So it's at least headed down to the 61.81 level, I think 59.93. Now, does that mean it's going to do it today? Well, it may not do it. It's not going to do it today. Or if it does do it today, we got real problems in River City. But that's what the DAX is trying to do. Now, let's switch over to the euro, because really this is important. By the way, our futures so far relatively flat, considering the pressure on the euro, considering how high King Dollar is, up about 48 ticks right now. And when you take a look at the our markets, you got the Dow futures off it's hovering around 40 points or so. S&P's down about 3. NASDAQ futures off about 4. Russell down about 3 as well. So our futures relatively stable, especially when you take a look at this next chart right here. This next chart, well, this happens to be the 30-minute chart. Let's switch over to the weekly chart first, and we'll take a look at a number of weekly charts today since we are ending the work week. And we're taking a look here. This is the this is the euro-US dollar currency pair. This is the weekly chart, folks. In the weekly chart, the last swing point, and this is a swing point of significance. I've talked about the importance of it being a two-planetary index date, the August 24th, 25th time frame. That week marked a significant low when we take a look at the euro, as well as in our markets as well. We take a look at the price point there. You're looking at 1.25861. The euro trading out right now at 1.25067. In fact, it looks like it's pretty much trading very, very close to the bottom. The low so far that's made is 1.25025, 025. And if this closes below, so this is the weekly chart, closes below 1.25861, folks, what it absolutely sets up, you've now busted through a swing point. The next swing point on the weekly chart gets you all the way back to 118,754. That's on the weekly chart, though. I'll put the monthly chart up there for you in just a moment. So what you're looking for from, excuse me here, because, you know, it's currency wars that are out there. That's what we have going on down there, and nobody wants to hold the euros. There is a directional correlation between the U.S. markets and what goes on with King Dollar, what goes on with Queen Euro. And so coming over holiday weekend, you get a close below that. It just simply sets up the possibility, the likelihood of a waterfall cascade. So if you're bullish, what you want to see is a close above 1.25861. If you're bearish, you want to see it close below that number. And right now, it's below. If we take a look just simply at the intraday chart out here, and then we'll switch to the monthly. Let's go to the 30-minute and see what's going on in the 30-minute. The lows that it was testing originally came in at 4:30 on the 24th. That was yesterday, 4:30 in the morning. You got back down there here just a little while ago as we came into the 9 o'clock session. You tested it at 8:30. Now you are down below that area. You know, what I've got up here on the screen is I do have the sacred geometry expansion and contraction numbers here. So it looks like the euro right now wants to at least move down to the 1.272 area of just simply the last move up. There's a couple of them we can take a look at. I'm looking at the move here, starting at 4:30 in the morning yesterday, all the way up to the high that was put in at the 9:30 a.m. time frame when it got up to a high of 1.21 So if we take a look at what's that 1.272 projection, 1.272 takes you to 124.865. That'll absolutely put some heat on the markets here in the U.S., but it looks like right now, intraday, that is where the euro wants to trade to. Now, I'm going to switch this over to a monthly chart, and it's just very important. You know, even though you may not be a currency trader, you don't need to be a currency trader, but you do want to understand the patterns that are out there inside the euro. And if we just simply come all the way up to its highs that go all the way back to July 2008 when it was trading up in the 369 area, and we just simply, the real B point here that I'd be looking at is this one right down here, June 30th, 2010. That got down to a low 118.754. That'd be our B point. Our C point, folks, right up here, May 31st, 2011. Really would have been May 1st, 2011, I believe, is the day. The 1-to-1 A to B equals C to D, and look at how this is traveling. It's truly traveling, and you've got a nice wide range bar already this month. Wide range bars tell you lower prices coming. I mean, that is an absolute. So what's that do? That gets you down to the $7 area on the monthly chart on the euro. Won't happen overnight, but that is where it's headed. Not before it gets to 118, though. 877-927-6648. We get right back. Dollar index just had a nice big jump, up 78 ticks. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of tfnn.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at tfnn.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. 877-927-6648. The euro melting away like a vanilla ice cream cone on a hot summer day. So everybody, be careful out there this holiday weekend. I don't want you to melt away. Right now, let's see, you've got the DAX. Let's take a quick peek around the world, then we'll go take a look at those few companies that released earnings after the bell and before the bell this morning. You got the DAX right now trading off 24 points. The FTSE down 28. Over in Asia last night, you had the Nikkei up 17 points. Shanghai gave back those same 17 points, and the Hang Seng up 47. Over in Spain right now, you've got the IBEC down 61 points and change. Let's go take a look at some of the earnings out there. Not much to report on. One we'll take a look at. Frontline Limited, FRO, is the ticker symbol. They closed out the trading session yesterday at $4.98. Last trade just fired off at $5.28. Frontline engages in the ownership and operation of oil tankers, oil bulk ore carriers. Primary transport is crude oil and raw materials. Their 52-week high, 1883, 52-week low, 252. And we take a look at the chart out here, and we look at their chart. Again, their last trade fired off at about $5.27. Now, here is, I last Friday, I was teaching a workshop, an all-day workshop, a worldwide workshop, how to buy and sell the D-point. I want you to understand that A, B, C, D patterns are always being made inside the marketplace here. I'm just simply going to use as the A-point, let's say the last swing point high out here. And it's all, I'm just grabbing this one just simply because it's closer. This one being March 28th when it was trading out at 789. The B-point came all the way down into the low as it was coming into April 23rd. Again, we're looking at a daily chart. Came in at 585, moves back up just for a few days to create the C point. Gets up to a high of 678. A to B equals C to D. Says 474. Where's it get down to on May 17th? 464. Closes out at 471. How about on the next day? Gets down to 467. Closes out at 469. Following day, you got a nice pop. That was on May 21st. That was on Monday. And this thing is going to pop just a bit this morning. Again, trading out at 528. It is going to take you where? Now, if you take a look at Frontline, this did have does have some nice volume here up at the high. No volume off of the top, really. The high that I'm taking a look at is March 19th at 18 million shares. The day before that, as it broke out and gapped up a bit, did it with 13 million shares. The day before that, where you had some decent volume, 505 million shares. That was trading out at the low there is 551. So it's going to try to get into that area this morning. Of course, it's going to need the help of the markets. Let's continue. Just take a look at a couple of those that are out there. We got Payphone. Payphone releasing earnings news last night. Payphone closed out at $45 even, Steven. Trading right now at $40 even, Steven. This thing must like even numbers. PAY is the ticker symbol on that. Let's go take a look at that, see where that is trading to. That is in a confirmed A to B equals CD down, I believe, this morning. The B point, where it's going to jump below that. The B point is actually 43.11. It's going to open up at $40. So we'll take a look at that. That A to B equals CD is going to take it down to 31.59. It'll take it all the way back into the lows, going back to August 2011. And remember, August 9th, I believe, is the day, is when our markets here made a significant low. Not Frontline, but Payphone wants to head into that area. Certainly has given the signals along the way. It gapped down on April the 30th. And, yesterday the volume wasn't good to the upside, that's for sure. That's on Payphone. Let's see, what else do we have out there? Very quiet in the markets. You got BRS, Bristow Group. Let's see here. I don't see, they are trading down, they're trading up about 1%. How about Tasco TNP? TSAKOSS. How would you pronounce that name? Sakos, maybe? Sakos Energy. They are, let's see here, what do they report? Revenues $102 million versus, I got to pop it up, versus $99 million. It's, again, the ticker symbol there, TNP. They're trading up about 3.3%. Last trade just fired off at $5.26. So not really much going on in the market. You do have one Europlasty, UPI, low dollar stock, $3.35, up 11% right now. Last trade firing off at 3.75, 4,800 shares being filled there. We get back, folks, we'll go see how these markets are going to drop and whether or not they're going to pop today. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. Out of the gate first, you got the Dow down 32 points. S&P's struggling to get out of the gate, down 70 cents right now. Composite off 80 cents. Small caps off 40 cents. So it is the Dow in the lead by a nose. If we take a look at what's popping and what's dropping in the marketplace, you got Tempur-Pedic. They are up $4.50. I don't know if you would like those Tempur-Pedic. Those That's not that. Select Comfort is the Sleep Number bed. Tempur-Pedic, those are the guys where you can have a glass of wine sitting there, you can jump all over the bed and it won't spill. Now, that's not such a bad thing. The bed didn't seem too comfortable to me. Anyways, Quest Software right behind them there, up $1.17. That's up 4.6%. You've got, can't pronounce this name, QIHOO. Kihoo! 360 Technology. QIHU, they're up $1. That's up 5%. CRM, Salesforce, Innovation or Corporation, they are up just a bit here, up about 1%. You've got Genome, G-N-O-M, Complete Genetics, they're up 31%. What the heck is going on there? Let's see here. Let's go take a look at what they are doing. I don't see anything out here. So G-N-O-M. Let's go switch over to that, then we can take a look at the ETFs, see how they are trading this morning here. So let's go to the show, and we are absolutely seeing divergence. We saw the divergence yesterday between the euro and the markets. Our markets acted really strong considering the euro was taking it on the chinny chin chin. And so if we take a look at, so there, it was absolutely divergence there. Haven't been able to put my finger on why, but you do want to be able to recognize those types of divergence. GNOM, though, that's what we're going to take a little peek at here. And give me a second here. So we'll take a look at that chart there. Trading out at $3.10 complete. Genomics Inc. They, life science company, develops and commercializes a DNA sequencing platform for human genome sequencing and analysis. I don't know exactly what that means. Sounds pretty scientific to me. Sounds like they're going to clone all of the best things out there. That would be good. So they are trading up this morning. They've got some volume in it. They are up, done 2.3 million shares here just simply in the last 6 minutes. That gapped up to $4.66 on February 13th. Did that with 27 million shares. And after that gap up, just simply moved all the way down into the low a couple of trading sessions ago. On the Monday, it looks like got down to a low of $1.57. So if you bought at the $1.57 and you're trading at $3, that's those folks are happy. Now, $1.57 happened to be its low. So this thing, folks, traded at a high of $18.55 not that long ago. June 6th, 2011. And there are some folks, I guarantee you, there's some folks that bought at that level and rode it all the way down to $1.57. You don't want to do that, folks. Use stops. I don't care what value of the stock it is that you are trading. You absolutely want to be able to use stops out there. You want to be able to preserve your capital. It's not about being right on every trade. It's just simply about money management. So let's continue to take a look. Let's see what's popping or what's dropping out there. So dropping to the downside, you got Apple down a couple of bucks. That's really, it can sneeze and do that. It's trading out at $5.62 right now. You got Google down $4, trading out at $5.99. Payphone, Verifone, PAY, the ticker symbol, they are down $5. That's down 11%. We knew they were going to be doing that. You've got Timken Company, TKR is the ticker symbol there, down 3%. Alexion Pharmaceuticals, ALXN, off 1.79. Monster Beverage, MNST. Let's go take a look at that, because that thing had gapped up on some pretty decent volume. MNST is the ticker symbol. Used to be, what was it? Because I used to trade. What was the other ticker symbol? MNST. I forget what the other ticker. Oh, Hanson Natural. It was called Hanson Natural. Now it's Monster Energy or Monster Beverage. So really not a big deal there. This thing, there was some kind of release about Coca-Cola or Pepsi, considering I think it was Coca-Cola. That was released in the Wall Street Journal going back to April 30th, and there were 19 million shares that came in there on that day. So you've certainly got some institutions sitting around with some shares priced in the $69, $70 range. Did gap away again on some strong earnings on May the 10th. Did that with 7.7 million shares. Now it just looks like it's trying to come down and fill the gap. Looks like it's doing an A to B equals CD down. Shouldn't, which will then fill the gap. The high out there on May the 10th being 74.92. The low coming in on May 21st down at 67.61. And the high put in yesterday or today. 1-to-1 A to B equals C to D takes you to 65.67. The top of the gap, 65.91. So that is on Monster Beverage. So let's go take a look at this divergence here, because if we take a look at the currency market, you can see the euro here. This is a daily chart, really not that far off of its lows, trading at 1.25379. You got King Dollar up near its highs where it was making a 1 to 1.272. A to B equals C to D. That was at 82.53, trading at 82.39 right now. The most bullish sign that you could see today would be a close of King Dollar underneath 82.40. Let me see here. Underneath 82.28. That would set up that would set up a bearish engulf, and that would have to be confirmed coming into Tuesday's trading session. And if we do quickly just take a look at, we got DAX just hanging right around its channel line. So let's go take a look at the ETFs. Let's look at the 5-minute ETFs, see what kind of volume. You should expect a light volume today. Folks are in the Hamptons, so the market can be pushed around, and that may be really just simply the divergence here, knowing that in reality with the euro melting down and being able to push the market up, that may be the signal. Don't buy into that. Maybe sell into that deal. So you should expect light volume today. Nothing, let's see here, so in the first couple of minutes of trading, you've got the IWM had some decent volume, did 1.1 million shares, a low there of 76.50, high 76.81. You're trading inside that right now. Again, no great shakes out here. So let's go take a look at the bonds. Let's go see what bonds are doing out here. So you've got the 20-year Treasury right now trading out at 133.20, up near its highs. If I put this on a monthly chart, so let's put this on the monthly, and what you can see, it is up over the 1.272 expansion. That was at 133 even. So where's the next expansion? If bonds continue to move higher, the next expansion would take on the 20-year would take it to 138.17. You're trading out at 133.2 right now. If we go take a look at the 30-year bond, let's take a look at that, see what that is trading out at. You've got that trading out 147.2, trading near its session highs. This is after making a 1 to 3.1415 1 to pi, A to B equals C to D. Very close to making that. That was at the 149 level. Actually, bonds got up, the 30-year got up to a high of 148.230. What's beyond that? Beyond that, folks, becomes nothing more than a, let's see here. How I would take a look at this would be expansion. So I would look at coming all the way back on the daily chart on the bonds to September 23rd, 2011. Actually, what I would do is I put this on a weekly. So let's put this on a weekly. Now we can see where the possible expansions are here. Now you could say the bonds could be setting up. Let's take a look at the expansion here between the swing point of August 27, 2010. And we know August, I mentioned August 27, 2010 is a key swing point. And September 23rd. So let's go take a look and see what that expansion is. We grab the expansion tool here, start from the swing point high all the way down to the low. So I made a little bit more than 1.272 area. Let's go ahead and shorten this guy up. And let's see if we draw in a 3 drive to a top pattern on the weekly chart. So let's see if we can do that. So I want to take a look at the time period we'd be looking at. Time period would take us right in here, which is right in the October time frame. So let's go ahead and compress this guy. Because what you can do, folks, with at least with the tools that I have here, what you're always trying to do is you're trying to draw some advancing patterns, leading indicators, and now that's not going to be a 3 drive to a top pattern no matter what. So we don't have to worry about that. So let's just take a look at the ABCD that's out there on the weekly chart. And that ABCD pattern, that will take you from a low here of 116.260. That is in February 2011. The B point in bonds would be September 23rd. This again is on the 30-year. This is on the weekly chart, and the high there was 147 even, and it pulls back twice. It looks like to the 135.05 area. Let's see here, 135.05. It sure does. So we're going to use the second one. That is March 23rd. So ABC-wise, folks, if you're taking a look at bonds on a weekly basis, it's getting up to the 165 area. And you can see as it is on a weekly basis, the way that it is traveling inside the C to D leg, that's where bonds want to head to, believe it or not. So that is what the weekly chart shows out there on the bonds, and we can see that they're over, the swing points out there big time. Let's go switch over to the Dow. Let's go see what is actually taking the Dow down, which is basically all except for about 8 stocks right now. So to the upside, you've got Microsoft up a quarter, Procter & Gamble up 28 cents, ExxonMobil up 17, Cisco up 13. You've got General Electric up 9. To the downside, Caterpillar down 97 cents, Boeing off 61, Johnson & Johnson off 52. So let's go take a look at to the upside and to the downside. Let's go take a look at the Microsoft chart out there. Let's do this here. MSFT is the ticker symbol if you are following along with us at home, MSFT. And so you got that at 29.35 right now. Microsoft had been very, very strong stock, and it's got some nice volume right up here at the high. No volume off the high. Actually, Microsoft coming right back to the breakout area. Kind of interesting. And the breakout area that I'm talking about is on January 20th, 2012. Broke out with 165 million shares. Went from a price point of $28, closed out that session at its session highs at $29.74. That was a big move for Microsoft. And Microsoft may be setting up a really large A to B equals CD. So let's take a look at the ABC on the way down here first. Let's take a look at the correction, because that is starting out here at the swing point high, April 20th, which did have volume, 32.89 on the daily chart. That's what we're taking a look at as the A point. B point being all the way down on May 9th, the low there being $30.10. Travels up for a couple of days. Looks like it does only about a 0.382 retracement. The 1-to-1 A to B equals CD was hit 2 trading sessions ago, so hit on Wednesday. 28.84 was that target, and 28.84 was taking you right down, in fact, right into that gap away on January 20th. Now, I don't see a bullish signal here that would say that this would be a buy just yet. Would like to see a bullish candle and we don't have that yet. You're trading up at 29.33. Again, remember, holiday weekend, and this market can be pushed around. So where else would be more likely the better play on Microsoft would be actually filling the gap. So that would be the 1 to 1.272 A to B equals CD down. If we take a look at the retracement off of the A to B level, A to B, you can see all it's done is just really above a 0.382. Maybe it did a 50% retracement when you take a look at getting to 31.54, where it closed at was at 30.76. So it makes sense that Microsoft would continue on and make a 1 to 1.272 A to B equals CD. That takes you right down into the area where it gapped up. So here's how I would put a trade on Microsoft, because you got good volume also down on January 19th as it would close the gap. And so your price area is target area is 28.03 to 28.43. If Microsoft comes into that area on less than 74 million shares, then you've got a really beautiful trade, because really the volume that you're going against, folks, is really the volume from January 20th that has 165 million shares. So you make it more difficult. Make the stock really prove itself to you. Make it prove its love. And the way that you would do that in the stock market, folks, is it would come down into that January 20th area, get into that price point around the $28 and change, and it would do it on much less than 74 million shares. Then wait another day. Wait to see if price moves in your direction. If it doesn't move in your direction, then you don't take the trade. Now, if we take a look at the retracements off of the lows that were put in on Microsoft, and no wonder it's November 25th, day after Thanksgiving, holiday out there, right? And if we take a look at from the lows out there to the highs, what you will see is that Microsoft trading below the 0.382 area. So what does that set up? You don't get that bullish signal here as it comes into the January 19th day. Sets up that it wants to get down maybe into the 27.58 range. A normal retracement, folks, that's the 0.618. That's the sweet. You come visit us here at TFNN the next time that you are in Clearwater, because we want you to give us a bear hug, or at least shake our hands. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Time to go water skiing because the markets are absolutely flat. You got the S&P's up a point, composite not even up a full point, Russell 2000 not even out of the gate, just hanging out, must be eating some hay back there, and the Dow down about 18 points right now. Expected to be a quiet market. Of course, it is not quiet when it comes to the currency market. So let's go surfing. Well, we don't want to go surfing because, it's a flat market, but let's go searching for clues out there. So who's going to be the first to give us any kind of clue? Maybe it's going to be the small caps. Let's go take a look at each of the daily charts on the ETF indices out there. Why the small caps? Well, here's one possible reason. The small caps are trading inside the October 27 swing point. Now, the small caps, on the small caps, that's 129 million shares. And the high on that, you trade inside it, the high on that is 76.97. So 76.97. And right now, it is trading at 76.69. So it doesn't have that far to go. 76.97. I'll write that down. 76.97, and it's got to go up to 76.74. See, we've got a caller on the line, and we're going to be running out of time. So let's go to John in Sarasota, and we can come back in the next show and take a look at the ETFs out there. John, thanks for calling. Thanks for holding.
Thank you.
How are you today?
Pretty good, thanks. Very good, actually.
Oh, good. Glad to hear it. What are you going to do this holiday weekend?
Go golfing, I'm thinking.
Oh, I like that. Okay, that sounds good. Should be great for that.
Yeah.
You wanted to take a look at, I don't think I have the right ticker symbol down here, so you'll have to give me what you wanted to look at.
Corn.
Corn. And so ZC is the ticker symbol there.
C-O-R-N.
Huh? Oh, C-O-R-N.
Yeah.
You want corn, C-O-R-N. Okay. Tecrium commodity. Okay, so let's go ahead and pull that up here. So I can tell me what you're doing and how I can help, or what you're looking at.
Well, I'm looking for corn to go to the moon because it's supposed to be a terrible summer.
Okay, so it's an ETF, and it is just simply truly based on corn. Let's see, fund invest in the commodity markets in the United States. Doesn't tell me exactly, but I'm assuming that this is just based on corn, right? Okay, so trading out at 35.98 right now. I'd have to go actually take a look at probably see how this trades with the actual commodity. So corn futures would be ZCF. Let me just try to pull that up here for a second and see if this is emulating that chart. Have you traded this before?
Yeah.
You have? Okay, good. Okay, so take a look at the corn futures here. All right, so let's put this back up here. And you're looking for a entry point?
Yeah.
Now, one of the things that I would absolutely do is use the position size calculator when you do take a position here. So if we take a look at any A, B, C, D patterns that are out here, the one I would be looking at would be going to the swing point on March 16th. That swing point high, which was at 41.64. So I would use that as the A point out there. And then for a B point, you could actually use the one on March 29th when it pulls down to 37.59 and then comes back up into the 03. So 35.76, and it's trading at 35.98 right now. So, it's completed the A to B equals C to D. And what it is doing, it's coming back and it's testing out this swing point now at the May 11th time frame. That had 84,000 shares. So you're not dealing with a real liquid instrument here. And coming back with only 12,000 shares yesterday. Oof. There's not a lot of liquidity here. You got to make sure that you're right on this trade. You know what I mean? Because it won't let you out that easy with only 12,000 shares. I'll continue to take a look at it in the next show. Okay, John?
All right. Thank you very much.
Okay. Stay tuned, folks. We'll be back in just about 10 minutes here. If not, have a great holiday weekend. Bye bye now.